The following is a presentation of TFNN. Live at TFNN, The Money Masters. Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. Got half of the Money Masters. The other half is, it is Thursday. That means it's Real Estate Thursday. And Tom is out buying homes. Folks, if you haven't had a chance, go over to the homepage at TFNN.com. Under breaking news, you will see the bull market in Florida housing. It's a fantastic report, white paper, and it will give you an indication of what Tom is doing. Maybe if you have some interest, there should be a link on that. If not, you'll see a little banner on the right-hand side of TFNN.com for the Tiger Real Estate Opportunity Fund, and a great place to be able to take some longer-term investments that you already have off to the side in your self-directed retirement funds, and consider buying low to sell high, because that's what everybody wants to do in a marketplace. And I know that Tom is out there buying low in order to be able to sell high. Right now, let's take a look at our markets here. We got the Dow just turning slightly green, up $5 and change. You got the S&P off about 2 points, trading out at 1459. Composite trading out at 3,094. That's down 10 points. The Russell 2000 off a point. New York Stock Exchange down 2 points. The NDX off 8, out at 2767. Our call-in number is 877-927-6648. We'd love to hear from you. We got the dollar index up 15 ticks right now. Gold trading down $8. Silver off 26 pennies out there. Light sweet crude down $1.31 over in Europe this morning. You've got the DAX up 27 points. That is swinging for its swing point high. The FTSE up $2 and change. Everything was green over in Asia last night. You had the Nikkei up 176 points, the Shanghai up 27, and the Hang Seng up 102. So what are our markets doing? Our markets, let's go take a look at the S&P right now. The S&P 500, let's look at the actual index instead of the futures market. Let's go take a look and see what that is doing. It's trading out at the 1458 level. And what the S&P is trying to do is make its way up into this horizontal resistance zone. This horizontal resistance zone was tested on September 14th, tested again on September 21st. I just moved this line down just a tad, just like that. Tested again on October the 5th. That is where it is trying to get to. It's trading inside that swing point. So it is testing that swing point high from October the 5th. If we draw the line across the bottom here, what you will see is the low of that is 1456.89. If it doesn't close underneath that, it's not going to be a rejection of that swing point, and it'll want to go up and test maybe the high. You know, for my work, it just really needs to get up into the 1467-ish level. Could go up and actually test 1470.96. That's what you would prefer to see. But looks like what the S&P really setting up nothing more than a consolidation box pattern. If we take a look at what that box would be, that consolidation area, I would say that this would be a pretty good line to draw right here. So let's put this one in red. So now we've got the, let's make sure it's a straight line though. Looks like that line was drinking a little too much last night. We'd be looking at pretty much the lows here. I would say from September 10th, that was 1428. So say from 1428 up into the 1467. That is your sideways trading range. I suspect that's really what the market wants to do here as we come into election. I think just 2.5, 3 weeks away. Excuse me here. And if the market does pull back, what you can look for in the S&P is you can look for this little rising price trend. That is what has held the S&P in check out there. Let's go take a look at the Dow. Dow trading up 4 points this morning. Actually, let's switch over and let me take a look at IBM, see what IBM. So the Dow is up and IBM is down again this morning here. So let's go take a look at IBM. We can switch back and forth. But let's see what IBM is doing out here. Give me a second here to find that chart. So IBM really dragging things down in the Dow and in the S&P yesterday. Here she is. And volume coming out of it, it's below the lows of yesterday. So if we take a look at the volume here, yesterday it did 13 million shares, 12.6 million shares, taking out the B point, taking out a swing point, breaking a swing point on the way down. That was the October 10th level. That at 4 million shares. What IBM wants to do now for sure is travel down into the August 30th level. That's 195.47 to 193, only 2.7 million shares there. Today, thus far, this has done 1.2 million shares. So 1.2 million shares in a period of 42 minutes. So it's going to have the volume as it approaches that level. That should keep the Dow from rising very much today as IBM continues its move south. Let's see, where else? We have any volume here to support it? You'd have to say you can look at the July 19th candle that has 10 million shares. That high is 196. The low out there is 192. Now, as we take a look at IBM, probably the most critical level of support here is going to be this little rising window, this gap up that goes all the way back to January 19th. That level there, 182.36. That level has been tested. That has acted as support. And so if IBM does break this area of August the 30th, again, that low is 193.18. Does it with volume. That is where IBM will actually go ahead and trade to. If we go back over to the Dow and take a look at the Dow, see what it is doing here today. Also trying to get up into its swing point high. May actually be there. Let's take a look at it. The swing point high, it's not. And let's see, the low actually is October 5th is 13,568.75. This morning it got up to 13,571.94. So it has tested that area. Really something to think about. Now, folks, if you didn't catch my 9 o'clock show where I kick things off for TFNN, you know that on the Money Master side, I have been the one with the bull horns on, and those bull horns are coming down just a bit. The bear rug is out. I do suspect that we are going to see the market pull back here within the next couple of days. That's just the way that things seem to be setting up here. And, so anyway, thought I would share that with you. So the reason why I said something to think about is because the Dow has at least tested that October 5th swing point out there. And with IBM doing what it's doing, it's going to be tough for the Dow to truly make a run for the top of that swing point, which is October 5th. So it really is something to think about. Let's go take a look at the Russell 2000, see what the Russell 2000 here is doing this morning. Russell 2000 having a nice trading session yesterday. Russell 2000 trying to get up and tag this downtrend descending trend line here, coming off of the September 14th high. That's out at 868.50. Then you've got the high from October 5th out there. So Russell 2000 really not doing much today, but it looks a little bit tired here. If we take a look at, we haven't looked at the currency, so let's go do that because currencies rule. So now let's go take a look at the euro. So the euro getting up into the swing point area of September the 17th. The low of that is 130.824. It's at 130.941. The close of the euro today will be very important because it's trading inside that swing point, and it could be rejecting that area. And it's in essence what it's done is it has made a 100% move coming all the way back up to that level. Could it run higher? Absolutely. Could it run up to the 13,000? 13,000. Yeah, it could, Steve, on some other planet. But could it run up to the 1.30824? It absolutely could. Let's go down and dive down a little deeper into the euro, and let's take a look at the 30-minute chart and see what this is doing on the 30-minute chart. So let's go ahead and clear the decks out here. Let's at least get rid of these two elements here. And so let's go take a look at A to B equals CD patterns that we have here on the 30-minute chart on the euro. So the euro comes off of its low out here. The swing point would be coming in at 22.30, so 8:30 in the evening on October 10th. That low, 1.28, looks like 328. The high that it makes a run up into the 9 o'clock time frame on October the 12th. pulls back. And so let's go take a look at the, I didn't exactly draw that very well. Let me try to draw that one more time and connect the dots. It'll make it a little bit easier. Not that you have to be perfect, because one of the things I don't strive for, and you shouldn't either, is perfection. It just doesn't exist. Lowest standard on the human planet, on any planet. And so if you are a person that's a perfectionist, get rid of it, because it is getting you nothing. Well, what's this equity? What's this currency do? You got to love this. So it makes a run to from the A to the B, and does almost exact, we're going to call it exact, 0.618 retracement there. You got to love that. Look at how that works. 1 point, I can't, for whatever reason, I guess it's so cold in the studio here that I can't get this thing to click exactly right. You've got the idea. It makes a 0.618 retracement. That's all that we need to know out here. Let me get rid of that. Up at the 1.272 level. Do we see any bears here showing up in the euro just yet? Well, yeah, you got this little guy right here that came in at 9 o'clock this morning. And looks like there are a few bears that showed up in the euro. Looks like they maybe they went for a little coffee break, came back in the 10 o'clock time frame as the euro trades lower out here. The euro looks like it wants to pull back a little bit further, but I don't think its work to the upside is done just yet. That would say that the euro would want to get up into maybe the 131.590 level. So let's go back to the daily chart here, see what that would take us to, 131.590. So a little bit higher inside the September 17th area. But anyway, so that's where the euro is headed to. Let's go take a look at since I am wearing my Japanese shirt out here, polo shirt, let's go take a look at the yen. Window, tile, vertical, and see what the yen is doing. The yen is doing. That is putting some strength into King Dollar out here. You've got the yen trading out at 79.25. This is the U.S. dollar Japanese yen currency pair. As we take a look, this is the weekly chart. Let's go down to now in the weekly chart. Look, it's very important. And it's important to take a look at trend lines. You see me drawing trend lines on my charts here at TFNN if you watch us on Tiger TV. And you can catch all of the archives of this show on Channel 10 out there. And if we take a look at the weekly chart and we take a look at that trend line, it was first busted through on August 17th. Then the yen comes down and tests that area. Just simply, that trend line has held. You can see how it's been tested intra-week a number of times. Created a nice little hammer here on the week of September the 14th and really provided a pretty decent buying opportunity as it got down just below the 50% level of that wick out there. And then you got a nice little bullish engulfing candle, the October 5th level. That is on the weekly chart. So it looks like the yen is off of its low. It's going to get weaker. That's what will put strength in the U.S. dollar index out there. We take a look at the yen, however, it getting back, making 100% move. That's the August 20th level, and now giving a little bit of it back. That's what equities do, folks. They make 100% moves and move, and then they take a rest. I'm going to take a little rest here as we go to break. 877-927-6648. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Back, folks. We got the Dow off 22 points, the S&P down 5, composite off 18, small caps down 3. And you talk about signs, the bulls and bears made a nice sign for us here as we came into the 9:30 session here. We're looking at the ES Mini 30-minute chart. These signs, they work the same way on a weekly, daily, monthly chart here. That is a hammer candle. That hammer candle right here, down the low is 1451.50 on that. It's 10:24, 6 more minutes left. Now you can see that hammer candle, that low is a strong support area. Get a close below it, and it'd be nice to have a close below it of more than a quarter. But still, you get a close below that. It says if you're long, you are wrong. So in the next 5 minutes, perhaps as we're going into that next break, we will know what the bulls and bears want to do out there. You get a close below that. Here's what my expectation is. You'll see it run down into the 1446 level or so. And what you will see is then a bounce. You'll see a little bit of a bounce. It's that next bounce that you would want to be able to sell out there, and that is taking a look at the ES Mini. So when you take a look at volume coming into that hammer candle, right now 169,000 contracts. That hammer only had 31,000 contracts. So it looks to me like the kibosh is on. You don't know until the actual candle finishes and forms, and that's not for another 5 minutes out here. But I told you, or maybe I didn't tell you, I told the folks on the 9 o'clock show that I did stop by my favorite dry cleaner last night, and I picked up my bear rug. And that means I'm getting actually ready to use it, folks. So, as bullish as I am, seeing too many other signals out there right now that maybe the market wants to take a rest. Here is just another one of those signals. Won't be with you tomorrow because I'll be doing my one-day online workshop. Japanese candlestick charting, silent signals, the speed of trust out there. Depending on what level of trade, if you're an expert, you absolutely want to make sure that you are using Japanese candlesticks as your triggers in order to be able to enter trades. There are things that I will show you tomorrow, and if you just use one of those things, it will set you free. It'll totally change your perspective on how you take a look at stock charts, how you analyze what the bulls and bears, because, wouldn't it be nice to just be able to look at a stock chart, be able to put it together, not have to listen to me, not have to listen to the outside world, and just make your own decisions, because my whole outcome is really to be able to teach you to fish on your own so that you are totally self-independent, so that you can make your own trading decisions. And one of the tools that you absolutely have to have is the language of the markets, and that is nothing more than Japanese candlestick charting out there. And I will teach you things that aren't taught anyplace else. So if you're even thinking that you might be interested, just do it. Take some action. Maybe it might be massive action. You will not be disappointed out there. All the details on the homepage of tfnn.com. And again, that'll be tomorrow, even if you can't attend live. And I know there's a couple folks that may not be able to attend. And what they're going to do is just catch the archive. It's archived on your members page for 30 days. You've got access to me as well. So if you've got questions, either by email or by phone, I make myself available to all of my clients, because the way I look at it is you're underneath my care, guidance, and protection out there. And so I make myself available almost 24 hours a day. There's about 5 hours a day when I try to get some sleep out there. So if you're just thinking about it, if you're trying to figure out, hey, what's the next element that maybe is left outside of your tool bag, and you don't understand Japanese candlestick charting, then this is a place that you want to start. Now, you can learn it on your own. You absolutely can, just like anything in life. There's two ways to learn things. You either learn it through trial and error, and we all know the costs of that. My goodness, I got into the restaurant business back in the early 80s. Actually opened up a Chinese food restaurant, and folks, that was called, I'd never been in the restaurant business. I opened it up. I had a neighbor who was a pretty good guy till he found out that he was stealing from me, and but that I digress. But the point is that, what I did there was trial and error. And I learned a lot about the restaurant business, a lot more than I ever anticipated, than I ever wanted to. To me, it was an investment. Well, that was an investment that went south. And so that was not a fun experience, although, put me behind a wok. I can cook some Chinese food. Haven't done that for a while, but I could hop into a Chinese food restaurant and I could make some pretty good Chinese food. But I guess my whole point is the other way, folks, is to just simply be able to, learn from the experience of others. And that's really where you compress, days into minutes, weeks into days. And when you take a look at the amount of time that you need to invest, time is money. So check out, I'll go on the homepage of tfnn.com. I've got a special report out there that you can look at, candlestick silent signals as well. If you've never been to one of my classes, you should, because it's a great, fantastic, extraordinary experience out there. All the details again on the homepage of tfnn.com. Looks like that hammer might hold. We'll be right back.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. The Dow off 8 points, the S&P off 3, and we're watching the fight between the Bulls and the Bears. It's so great to be able, you just got to be patient out there. You got to take a look at the candle signals that are out there. You know what the outcomes are. You can see the Bulls not willing to give up their territory, that territory being the low of this hammer candle. That is 1451.50. You know, when I talk about that Chinese restaurant, I was deciding, folks, between buying a brand new Porsche Cabriolet. I don't know if you're a car buff or you love cars, but you know I love Porsches and Ferraris, all kinds of fast-moving cars out there, and was deciding between buying the Porsche or opening the restaurant. I went with the restaurant. I would love so much to go back to that decision and make that one over again. However, I learned a ton there. One of the things that we actually did is we created the first telephone system computerized system, because I came from the computer industry. In fact, I was still in the computer industry. This was just a side little venture here. And what I did was we created a system where when you called the restaurant, your number was already programmed into the system. So call I don't know if the numbers were in the system then or not. We might have taken your number, punched it into the computer. We knew exactly what you had ordered prior. And so we would have folks that would call, and they would just call with their number and say same thing, and that was it. Because, take a look at most folks out there order the same pizza. They order the same Chinese food. They order the same thing at a Mexican restaurant, a Greek restaurant, whatever it might be. And so that was a beautiful thing. So we took advantage of technology that was out there. Anyways, enough digressing. Let's go take a look at these markets here. Let's go see what's popping and dropping. You can always give me a call, 877-927-6648. To the downside here, you got Melanex Technologies and Align Technology, both off 20 and 26% respectively. Let's go take a look at those equities here. Truly getting hammered, just as IBM is this morning, continues to get hammered out there. So as we take a look at those two equities, let's start with Melanex. You can see the volume coming out of this thing just absolutely huge. This is going to go make a run for the last time it had a sign of strength, which is down on the July 18th level. That is at a price point of $67.69. It's at $78.54 right now. However, that sign of strength, still 6.4 million shares with that sign of strength. However, today it's done 3.5 million shares. That's after yesterday, 3 million shares being unloaded. So this thing here is seeking lower price for sure. I do see a little hammer candle out here. When you are below, actually two hammer candles it looks like. When you are below a hammer candle, when you close below it, if you're long, you're what? That's right. That's I want to kind of maybe take that phrase. What Ron Popeil, his phrase was, set it and forget it. Well, maybe I'm just going to use, if you're long, you're wrong out there. And that's how you want to be able to trade those hammer candles out there. That's on Melanex Technology. Let's go take a look at Align Technology, two technology companies taking it in the shorts here today. Where is Align? Because they are certainly out of alignment here this morning. Apparently so out of alignment I can't even find it on my screen. Somebody's yelling. It's right there in front of you. I can hear that. I'm just going to go ahead and type it up here. So ALGN is the ticker symbol. This had volume off of the top yesterday, and it's got more volume off of those highs, gapping down. This thing here today already doing 9 million shares. So you've got the institutions unloading this. This takes this equity all the way back into the next area, which is going to be October 28th. That's going to be down in the 24 range. Let's put this on a little longer term chart now and take a look at it. Let's start with the weekly. How do you like that stock chart there, folks? Now, okay, so wide-ranging bars out here. You don't think that this thing has done this before? You think there's patterns? You think we all have patterns in life, folks? Just talk about patterns of ordering food out there. In fact, some people, today's Thursday, might even eat at the same restaurant every Thursday. I don't know why I said that. Anyways, if we do take a look at the Align Technology, it had a wide-ranging bar going back to October in 2007. That took you from a high of $28. Didn't see that high again. Oh, let's see. How many years did it take? So that goes from October of 2007. You don't see that high until April 2012. That's a long time, isn't it? Well, folks, it didn't stop there with that wide-ranging bar, because what Align Technology did on the weekly chart went all the way back to the lows in October 2008 down to $4.88. Something to think about. Folks, when you see volume off the top, just simply get out of the way. Take your loss if you're in it, and just go look for some other equity, because this thing here is headed for $15 and change. It's at $25 right now. That was on Align Technology. Let's go take a look at how could this possibly be? How does it work like this? The name of my restaurant, folks, was called the Oriental Express. You got to love it. It was really just a carry-out place. It was just a carry-out place. There was no sit-in dining. I had actually tried buying a Domino's pizza. So if we have what the heck? I might as well continue with the story so you get a little bit of the background. It was back in the early 80s. I was from, I'm from Detroit area, and the guy who started Domino's Pizza, Moynihan, I wanted to purchase a Domino's Pizza franchise back in the early 80s. Now, in order to get a Domino's Pizza franchise, you had to work for him for a year. I kind of get that now, having owned a restaurant, and I was buying it as an investment. Tried to work out a deal with them where didn't have to do it for the full year. I was going to just simply hire my neighbor, pay him to subsidize him to go work in a Domino's Pizza place. We got the term down to maybe like about 6 months. But what they wouldn't do, so we got the term down, they wouldn't guarantee me a specific territory. And this was at a stage where they were really just growing, and I wanted a specific territory as well. They wouldn't do it. And so I ended up going into the Chinese food business. And there was a couple other guys that were attempting it as well, so it made a lot of sense. I should have stayed in the pizza pie business for sure. But the reason, how did I even get there? Well, I got there because the next stock we're going to go look at is called the Orient Express, OEH. How does that happen in life? So let's go take a look at the Orient Express. That's having a good day out there. OEH is the ticker symbol, and so this is having a really good day. So how does that work in life? Folks, you just simply, if you think it can happen. How about that? So this thing here, let's go see what is behind this move. Up 36%. Somebody buying them out, and they're the Orient Express hotels. Huh. How about that? I wonder what hotels they actually operate. Maybe somebody in the den can do just a quick research for me. Tell me what hotel chain the Orient Express Hotels actually is. Be curious. Well, look at this thing here. Something going on here. This thing this morning having wide price spread, accelerated volume, big time. This equity here opening up at $8 and opening up at $9.02. Trading out right now at $12.39. Has 4 million shares in this thing, taking out all kinds of, except for it's really just trading into a sideways move. Let's go put this on the weekly chart out here. Come on, somebody look up, tell me what Orient Express hotels, what do they operate out there? Would just like to know. So this thing here, taking out a swing point from April 27th, 3.9 million shares out there on the weekly charts. This thing here is going to make a run for, I suppose, let's pull this back even a little further here. So take a look at this thing has been trading in a sideways consolidation since October of 2008 out there. So the highs of this consolidation bring it back into the 1533 level. It's at 1237 right now. I suspect that's where it will head to, which is the swing point from April 9th, 2010. That swing point high is 1554. The Orient Express. A buyout by Indian Hotels. Is that what's going on? Okay. Doesn't show up on my news. Thank you, Trad, in the den there. But still would like to know what hotels they actually operate. So let's see. Somebody's got something up here. They, with their subsidiaries, that owns, manages, invests individual hotels. I don't see the name of the chain though. I guess they're called Orient Express Hotels. Never seen one. Maybe somebody out there has stayed in an Orient Express hotel. What do I know? So let's go. A little off kilter here. Let's go take a look at a few other things here that are popping and dropping. Let's go take a look at Lindsay Corp. LNN is the ticker symbol. That's up 5% here this morning. LNN. Let's go see what this equity is doing. Had some nice volume in it yesterday. Did just kind of move sideways. And let's go see what this is attacking. It's attacking an area of resistance out here and really trying to take it out. So the swing point that it is trading into goes back to the August 2012 timeframe, August 10th, 2012, 103,000 shares. So not a really liquid instrument out here. That high being taken out this morning with 103,000 shares thus far. So where is the next area for this equity to travel to as it gets over a number of different swing points out here? Looks like this wants to make it all the way back into, this is interesting, it's got a high volume high out here. April 30th, 2011. The high there is 79.19. Looks like that's where it wants to head to. 77.18 is the low. that had 1 million shares out there. Let's go take a look at, what do we want to take a look at here? How about some of the ETFs? Well, you know what? Bonds. James Bond. We got to take a look at bonds here. I've been showing you this bond chart for certainly a number of weeks. It is one of the reasons that you certainly want to go ahead and use some trend lines on your chart. So on the 30-year Treasury, this trend line goes back to the lows off of the March 19th level when you had bonds out at 135.05. That's really my first touch point out there. You probably could use this touch. My second one could have been April 4th. I just simply used the low that was hit on September 14th, that level, 144.16. Bonds having a horrible day yesterday, truly giving it up. But what stopped it? What stopped bonds from going lower? Well, it's going to have to break this trend line here, this trend line going back quite a ways. However, what stops bonds as they're moving up to the highs is a descending trend line. That's coming off of the high here from July 25th. So you can see how bonds have just simply traded inside that range. Bonds, I suspect what we will see bonds trade inside that range as well. If bonds trade higher, what does that do to the market typically? Exactly. That's one of the reasons, only one of the reasons, why I've gotten my little bear rug out and just waiting to open it up and take a nice little sleep on it just for a little while. That is on bonds. Important to take a look at trend lines on any charts. And then what you want to make sure is you understand the candlestick signals that are being offered. Again, if we go back and check on the ES Mini, we see that hammer candle still holding out there. The bears doing the best that they can to defend their position. Let's go take a look at high host silver here this morning. Silver trading out at 32.88. That is off about 35 cents here. As we take a look at silver, silver's running into a support area that happens to be, for whatever reason, can't tell you why, but it happens to be that 50-day exponential moving average that has held silver in check here. But I will tell you, in taking a look at the weekly chart on this and the daily chart, this does not look good. Looks like, when I say not good, looks good from the standpoint if you want to get in on silver, because it looks like it wants to pull back further. Where would it pull back to? You know, the most likely logical area, and this is what you're going to really have to, why you're going to have to pay attention to candle signals here, and that is this. That is because what you could get down to the 200-day, which is 31.29. I'd like to see it get back into the 0.618 level, which would be $29.67. That would be nothing more than a normal move here. But you can see right here, off of this downdraft candle here, this is the October 15th candle from a couple trading sessions ago where it did 38,000 contracts. What silver has had is had 3 inside days here. That's another one of those Japanese candlestick patterns that I'll be teaching my folks in tomorrow's workshop out there. You would want to know what to do when silver is doing that. Let's go take a look at natural gas out here. Here's a situation where we can take a look at a rising price channel that natural gas has been inside. Natural gas trying to work off its overbought condition. Take a look at that rising price channel. Doesn't look like to me that natural gas it's going to pull back, but does not look like to me it's going to pull back to the bottom of that channel out here. I would say that what we're looking at, let's take a look at retracements from the low. And we're going to start with the September 19th date. That's the last low on that rising price channel, all the way up to the high from October the 12th. 0.382 is 3.295. $3.08 is the 0.618 level. That's where I'd love to see natural gas be able to pull back to. Let's go take a look at the Spider ETFs out here. Let's go see what the XLE and the XLF are doing. The XLF trading out right now at 1632 on light volume as it attacks the swing point from September 14th. That swing point, 122 million shares. The high out there, 1644. Looks like that wants to be tagged. XLF, the financial sector, may be giving us a signal out here in the not-too-distant future. Got the Dow up. No, Dow down 3 points. S&P's down 2. We'll be right back, folks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Thomas Edison didn't invent the light bulb, he made it better. As the fourth most prolific inventor, Edison found that most people failed because they failed to realize how close they were to success before they gave up. Success requires a few disciplines, practice each day. When it comes to trading and investing, one of those disciplines is understanding and acknowledging the language of the markets. For centuries, Japanese candlestick charting has unlocked the hidden treasures of the language of the bulls and the bears, the buyers and the sellers. Candlestick charting is a tool, not a trading system. Candlesticks tell you when to enter, when to exit, and identify the risk and reward for every trade. Candlesticks identify market turns before they happen. I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, and on Friday, October 19th, I'll be conducting an online, one-day course teaching you the secrets of Japanese candlestick charting. Go to the homepage at tfnn.com and sign up today, because candlesticks will make you a better trader.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. You got the Dow off 8 points right now. We were talking about the Orient Express hotel chain, just simply because I have something in common. I owned a business called Oriental Express, so close enough. The hotel chains, so their collection in the United States looks like they have just a few. One out in Santa Barbara, California, called the El Encanto. They've got one up in St. Michael's, Maryland, called the Inn at Perry Cabin. In New York City, they've got one called 21. That sounds a bit posh. And then Charleston, South Carolina, called Charleston Place. So just thought I would share that with you. Their stock up nicely today, up $5. Where is it? Orient Express here, up $3 and change. That's 37%. So they are doing pretty well. Let's go take a look at Snap-on. Maybe that's Snap-on Tools. They are trading up 4%. SNA is the ticker symbol. And then we'll go back and take a look actually at a couple of the sectors inside the S&P. We saw the financials were trading inside the swing point high that it wants to test. Let's take a look at SNA first, and we'll go back and take a look at the XLE, at least as far as one of the other sectors, maybe the XLK as well, technology. So if we take a look at Snap-on, gapping up this morning, looks like it is certainly taking out its most recent swing point here. Trading up with 469,000 shares out at 77.31, taking out the September 7th level that had 369,000 shares. Not a bad looking stock chart here. Let's put this on the monthly, see what we are dealing with here. So on a monthly chart, let's go ahead and see on a monthly if this is a confirmed A to B equals CD up. So everybody in this equity here is having fun at the party. If we take a look on the monthly chart, you've got a swing point here that goes back to July 2011. The volume on that was 8.1 million shares. So let's see, as that was taken out, was it taken out with volume? Oh, yes, indeedy do. It absolutely was. So you had wide price spread, on a monthly chart, not too bad. Wide price spread, accelerated volume, taken out with 9.5 million shares. So now we've got a confirmed A to B equals CD up. So this looks like a pretty nice momentum play here. This equity here, the 1-to-1 A to B equals CD, takes you to 85.62. But if you take a look at the most recent leg here, that C to D leg, you'll see price on the monthly chart moving well to the west. That means on the inside, that says $97.55 could be a target. Now let's just go take a look at expansions of swing points, because you want to understand not just swing points, but you want to understand expansions of swing points because that will help. You can see it's up over the 1.272 level. This gives you the target range. So it looks like 87.98 sets up a 1.618 butterfly sell pattern. 85.50 is the 1-to-1 A to B equals CD. That is where SNA Snap-on Inc. is headed to. Let's go take a look at the XLE, and we'll snap on to that. See how that sector here is behaving this morning. The energy sector having a pretty decent day yesterday. Oh, I know what I was going to show you since we talked about Fibonacci numbers. I'll do that in a moment here. So let's take a look at the this equity trading out at $75.03 this morning. Where is this really headed to? It's really a great question out here. Let's just take a look at the retracement here off of the high to the low on the energy sector. Not really doing a whole lot. Looks like this doesn't have much more movement up, only maybe to 75.27. Let's see if I can quickly switch over to the world charts here, and let's go take a look at the Nikkei. And here's, okay, so we've got the Nikkei here. I think I can do this just in time. We're going to see why you want to understand your Fibonacci summation sequence. We take a look at the Nikkei. It didn't show it. Making should be about a 1.272 expansion last night of a set of swing points coming to 618. Stay tuned, folks. Basil Chapman will be up next. Again, I will see you on Monday doing an online full one-day course tomorrow. Candlestick charting. Go to the homepage at tfnn.com. All the details there. Have a great weekend. Look forward to seeing you Monday.